Hi, everyone. Thanks so much for being here today. My name is Rebecca Pearl. I am the program specialist with AARP ElderWatch. And today we are going to be discussing debt for our Money in the Morning series. This is a three-part series. This is part 2 of 3. You don't have to attend all of them. They are recorded and posted to YouTube, and I'll share that information. But welcome. Thanks so much for being here. And before I get into the nitty gritty about what we're going to talk about today, I just want to talk about the great work that AARP ElderWatch does. The 19-year partnership with the Colorado Attorney General's office going on 20 years. We're very excited. We do education and outreach across Colorado on fraud prevention and financial security. So presentations like this on a variety of different subjects for community groups, just the community in general, all sorts of people. And we also have a volunteer staff fraud victim support helpline. So if you or someone you know has been a victim of a fraud or a scam or has questions about what's going on with frauds and scams, feel free to give us a call. We will happily help you out. And that number is 800-222-4444.
Yes, I'm listening to this class.
And then finally, we have peer-to-peer financial counseling that we can assist with a variety of different subjects, checking credit reports, understanding those, identity theft protections, getting connected to financial resources in your community, and then finances after the loss of a loved one. All right. So today is going to be an interactive workshop. Feel free to keep your camera on if you'd like, but you can also mute while others are talking. That would be great. Please put questions in the chat. That's fantastic. Love being able to see those. This is being recorded, just to mention that. So if you do not want to be on camera, I totally understand as well. And I will be monitoring the chat throughout. There is a raise hand button. If you go to more, you should be able to see that. So feel free to use that as well to get my attention. And then lastly, this is not financial advice. It is just education. So please, please, please consult with a lawyer or a certified financial planner or a debt counselor before making any final decisions. Please do not make any of your decisions based off this. It is not financial advice. So let's get started with what is debt. Debt can include a loan that helps you buy a car, a house, money for education, or a big expense. But not all debt operates the same way. There's secured debt and then there's unsecured debt. And secured debt is a loan that's taken out either from a bank or money is borrowed against a physical asset, right? So that's going to be either a house or a car. A lot of times these are slightly riskier, but they do have a lower interest rate. So this is going to be something like a mortgage. Unsecured debt does not involve any assets. Instead, repayment in a timely manner is vital, or limits might be put on your ability to borrow later. It's going to be more like credit card debt. And this is less risky, but there are higher interest rates. So sometimes seeing a little higher fees for taking on those costs. Everyone loves to talk about credit cards and credit card debt. I know. And this is, again, one of the most common forms of unsecured debt and is also revolving, right? So you're meeting minimum payments each month, hopefully, and also not spending that total credit limit. And so credit cards have, when you sign up for it, you get how much interest you'll be charged per month if you don't meet that minimum payment. And then you also get your total credit limit. And sometimes these can be automatically raised. For example, a few months ago, I got a letter from the bank and it just said, hey, we've raised your credit limit from $3,000 to $4,000 because you've been paying on time. Congratulations. So it just automatically happened. But you can also ask for higher credit limits if you would like. And that total credit limit, that not spending the total credit limit is going to help your credit score. We are not going to get into credit scores today. That's like a whole nother presentation, but keeping that at about 25% per month is going to help increase your credit score. If you're spending that total credit limit every single month, that is maybe going to decrease your score just a little bit. And then that interest is charged when the balance is not paid each month. Usually that's just that minimum payment. And if these are managed properly, credit cards can be one of the cheapest ways to borrow, because, you know, you're able to pay all of the money off. There's low interest rates. A lot of times you're not getting hit with fees beforehand, anything like that. So it can be really, really great for some folks. There are also rewards credit cards that you can, you use them, you get points. Sometimes those points convert into cash. Sometimes that cash can be put right back on your credit card to pay off that bill. That's a great way to, keep track of debt and maintain those payments. And if you haven't done this, this is going to be your homework for today. If you would like to do this now, you absolutely can while we continue talking through some of the other aspects. But calculate your credit balances for the month. How much have you spent so far on your credit cards? We are actually getting up to the end of the month now that I look at it. That I feel like that happens so fast. So just add up what's the balance on each credit card and see how much at the end of the month you may have to pay off, or at the very least see how much you have to pay on those minimum payments. Stay on top of those minimum payments, won't get hit with interest, and it'll be easier to just manage overall. Everyone also loves to talk about student loans and student loan debt. It's just such a fun subject, I know, but hang in with me. We will get through the nitty-gritty of it. And this can either be for you as a borrower, or maybe you're helping someone with their education and helping them take out those loans, being a co-signer on those loans. Understanding it is going to be very helpful to staying on top of it just in general. So there's two different types of student loans. There's federal loans and then there's private loans. So federal loans come from the Department of Education, they're government loans, and then private loans come from the banks. Federal loans have protections that private loans do not, and that includes flexible repayment options. So sometimes there's ways where you can, do work for 3 years at a nonprofit or something like that, and then your loan can be forgiven or paid back in full or partially. A lot of times those don't exist with private loans. And there are 4 different types of federal loans. There's the direct subsidized loan, which is an undergraduate loan for those who demonstrate a financial need, and that's based on income. And then with that loan, there's no interest that needs to be paid until 6 months after school is completed. So that deferred start to payment can be really helpful for undergraduate folks who are entering the workforce to try to find a job and then be able to, start those payments once they are settled in either with a job or with, further school. Direct unsubsidized loans are not based on financial need, and interest is paid well at school. And then there's also grace periods and an ability to defer those payments. So a bit different than the subsidized loan in that there's no break. You're paying it at all times. And it is not based on that financial need. So that looks differently as to how much money you might receive in an unsubsidized loan versus a subsidized loan. The Direct Plus loan is for graduate or professional students, which it covers expenses that aren't covered by other financial aid. So this means, let's say you're, have some portion of your graduate education being paid for through a scholarship. That's great, right? This Direct Plus loan can cover the rest of tuition, and it can also cover, let's say, books and housing. But eligibility is not based on need. So anyone's really able to get these loans, but a credit check is required, which is why we want to stay on top of debt at all times. And then the last one is the direct consolidation loan. And this combines all eligible federal student loans into one loan with a single loan servicer. So this makes it so, let's say you have all three types of those loans: direct subsidized, direct unsubsidized, and direct plus. And you're, I don't know, maybe you're doing a undergraduate, graduate degree combination thing and somehow just magically qualify for all of them. The direct consolidation loan would make it so all of those loans would be one loan with one loan servicer. You're dealing with one person and one loan paying off in that lump sum. So for this part, the thing, if you or someone or someone you're assisting with debt or student loan debt, you're assisting with taking on student loans, assess options outside of taking loans. There are tons of grants, there are tons of scholarships. Work study also is available in some places, is a really fantastic option. In others, there may be aspects that are missing or don't work. But there can be some great alternatives to taking out loans. And also be sure, even if you're co-signing, that you fully understand the loan before you sign that piece of paper. Because it does mean that you are responsible to pay that back. I had someone I spoke with a few months ago who was a co-signer on student loan as a grandparent, and they somehow did not fully understand the loan and were stuck with huge payments that they weren't able to make. The student wasn't able to make the payments as well, and it led to a really sticky situation. So just be sure you understand fully what you're signing before you sign it. A little bit more about student loan debt. There are additional requirements required if adverse credit is something that you're experiencing. You can still qualify for the Direct Plus loan, but there might be a little bit more information that the loan servicer would need. Undergraduates can borrow between $5,500 to $12,500 each year. And then graduate or professional students can borrow up to $20,500 in direct unsubsidized loans. And then the Direct Plus loans, again, can just cover those costs, maybe not covered by financial aid. And financial aid, just as a note, comes through the school. They either email or you log into the portal, or they send you this piece of paper that outlines all of the potential aid you can get. Private loans, in terms of student loans tend to be the most expensive because the lenders are setting the rules, which means the bank is setting the rules instead of a government entity. And some of these loans do allow deferrals, but interest can vary in a lot of different capacities. And these also might be tax deductible, but it really depends on the servicer and where that loan is coming from. So inquire about what the repayment options are for any private loan. What are the possibilities of postponing, lowering payments, and if there are penalties for paying before the time to start paying starts. So I did mention this before, but again, federal student loans can be forgiven, they can be canceled, and they can be discharged. So completely, under the Public Service Loan Forgiveness Program. So this is, again, one of those programs. Let's say, you get a job, AmeriCorps, volunteering, something like that, nonprofit, and they say, okay, after 3 years of teaching or 3 years of working in this job, we'll forgive your loan, cancel it, etc. There are income-driven repayment plans that can be tapped into. And so these take, how much you make per year and say, okay, this is how much you make per year, how much income you get per month, and this much is going to be paid out of that income every single year based on how much you make to this loan for X amount of years. And then finally, if you have student loans or someone has student loans that you're helping with, calculate those student loan payments per month. See if, I'm going to go ahead and assume everyone here has a budget. So see if there's wiggle room in your budget to maybe add a little extra onto paying off those student loans or paying off other debt. Mortgages. This is a super fun one, especially right now. I know the real estate market is absolutely booming. So excited to get into mortgages. And these are loans used to purchase or maintain a home, land, or another type of real estate. And so these are a little different because these are regular payments that are made. But the property is serving as collateral to secure that loan. So that, secured debt, like we talked about in the beginning, is what we see here. So there's also interest of these loans, and the cost depends on a variety of different factors. Type of loan, term, so how long it's going to take to pay off that loan, and then the interest rate that's charged by the lender. If you are unable to make a mortgage payment, see if you can first work with your mortgage company to temporarily reduce or suspend those mortgage payments through what's called forbearance. This is possible for some folks, and if you fall in this category, see if that's something you're able to do, because it will help potentially ease the burden of having this mortgage to pay. Loan services do not report late payments from forbearance to credit bureaus, so those won't show up on any of your credit reports. Other creditors will not be able to see those. And late fees and penalties are also waived, which is huge because you're not incurring extra costs while trying to figure out how to pay the mortgage you already have. Right now, refinancing is all the rage. So it is taking a long time to get through that process working with lenders. So just as a warning, if you're trying to refinance, it might take a really, really long time. So just, factor that into any planning that you may potentially be doing in terms of your mortgage. So this is another thing that's in huge demand, talking about booming markets. Cars are in insane demand right now because of these supply chain shortages with chips and, physical materials. And so this is a prime time potentially to leave your car lease if it's too expensive due to a change in your circumstances. And there's a few different ways you can do this. You do want to, speak with a financial advisor before going through this, but it is, a possibility if there's a lease that is now too expensive. Try speaking with a leasing company to see how much you'd be charged to just return the car today. How much are they going to charge for that? Just be done with it. Maybe you have another vehicle that you can rely on that is a way to make that work. Check the price against third-party valuation. So this is going to be a lot of these online websites, CarGurus, Vroom, Carvana, and see what they're saying about how much they would charge to buy that car, right? So there's also lease termination and lease swap companies that exist. Be sure to make certain that they are legitimate companies. Do not want victim of fraud or scam. If you're not sure about the legitimacy of something, give us a call if you need, But if they are asking for any sort of personal information or payment before receiving any services, that is going to be a big red flag. Consider a lease transfer. That is a possibility for some folks, and it allows the lease to be transferred to a different vehicle. And so, that's a possibility every once in a while. But you can also consider, maybe you have another car sitting around, and you can sell it and then put that money towards the lease. That's also a good option in this scenario. So if that's something you think may fit your circumstances, talk to a financial advisor first, but there are some options to getting out of that car lease. All right, so everyone take out your calculators and your pens and papers. Let's calculate some debt. Debt to income ratio is going to be monthly bills divided by total gross monthly income. So that's your income before tax. That's how much you take home every week or month or every other week before taxes. So if you have the time, you want to do this now, again, while I'm talking, absolutely feel free. Add up all of the things you spend money on during the month, and then again, divide it by your income before tax. So the lower the percentage, the less risky you are to lenders. You will, come out with a percentage for this. And this makes it so this is part of the way lenders evaluate whether or not you are a good candidate to give a loan to, is this debt to income ratio. And you want that number to be lower because it shows less risk. There are other ways to show less risk, right? If you pay every single month on your credit cards, if you have a high credit score, etc., you're also showing less risk, but this is a big component. And then be sure to just stay on top of that debt calculation because these things can change kind of rapidly at some point. Add up that credit card debt, student loan debt. If there's medical bills that are outstanding that you have to pay, add that up too. Auto debt or loans, and then also that mortgage. Keep track, I know I just said that, but keep track of these payments and update the calculations accordingly. It will help so much in trying to, get on top of that debt. And if you are having trouble getting on top of that debt, one of the things that people recommend all the time is the snowball method. And that means paying the lowest amount of debt first. And you might be like, why would I pay the lowest amount of debt first? That makes no sense when you want to tackle it from the top down. But the lower payments you can make a lot of times have potentially higher interest rates. And so you can stay on top of the interest rate. And it also gives you a little bit of empowerment because you can pay off that, lower payment of debt faster if you're paying every single month than if you're just trying to tackle big amounts of debt every single time. So it's a way to empower yourself to take control of the situation as well. Develop a budget. That is the best way to manage debt, but y'all already have a budget. I know it. Contact your creditors, try to work out a modified payment plan that can reduce your payments to what you can manage today. Debt collectors must honor a written request to stop further contact. If you have debt collectors calling you though, make sure they're legitimate. Ask where the debt's from, if they have an identification number with the debt collection agency they're calling from, and ask for a number to return their call on to make sure that they're not just trying to scare you and get you to pay debt that you might not actually have. Debt relief services also may be able to assist with significant credit card debt. They provide financial advice and create plans for repaying creditors. So, and I'll talk a little bit more about credit counseling on that next few slides as well. Stay scam safe. That is the biggest takeaway. Stay scam safe and have a budget. So one of the options for managing debt or debt relief is debt settlement. And these debt settlements are offered by for-profit companies, and they negotiate with creditors to allow you to pay a settlement to resolve outstanding debt. So you pay, a lump sum fee instead of each creditor every single month, different amounts of money. And then that, theoretically resolves that debt. However, payments are transferred into an escrow-like account, so it accumulates savings to pay off the settlement when it's eventually reached. And it can take a really, really long time for these settlements to be reached. But while those settlements are being reached, you have to, you're still incurring debt. So that can be a little bit of a risk. Programs, especially because these programs often do encourage clients to stop making those monthly payments. So you might still be incurring debt, but not making any of the payments on it. And often there's a requirement to deposit money into the account, the escrow-like account, 36 plus months before the debts will be settled. So it's, literal years before these debts might be settled, and the payments might be a little bit difficult to make because they might be large amounts. Creditors also have no obligation to agree to negotiate a settlement on the amount you owe. So that means, this company can approach a creditor and say, let's say you go through this, you stop making the monthly payments to this creditor. The company approaches the creditor to try to negotiate, and they don't agree. That's it. And the process might have a negative impact on your credit report just because of the length of time and no guarantee that those debts are going to be settled, unfortunately. So like I mentioned before, credit counseling organizations advise on managing money and debts to help with budget developments and offer free educational materials and workshops. Counselors do have to be certified in consumer credit, money and debt management and budgeting. And then they are able to use, their expertise to discuss your entire financial situation and come up with a personalized money management plan. Usually initial counseling sessions are an hour, and then there's an offer for a follow-up sessions. So a lot of times these will be marketed as free, but sometimes there's underlying fees involved. So just double check that this free counseling is truly free. Read the fine print on this one. And then finally, bankruptcy is the most extreme way to stay on top of this debt or relinquish this debt. And the consequences can be long-lasting and far-reaching. The discharge of debt, says, you're absolved of debt through court, and that's it. You don't have to pay the debt, but information about the bankruptcy will stay on a credit report for 10 years. It's a lengthy process. And then there's two different types, right? So Chapter 7 bankruptcy involves liquidating all assets. So that means selling basically everything that's tangible that you own, car, house, etc. And then Chapter 13 bankruptcy allows people to live with a steady income to keep property, but it's, still not the most ideal way to go in any Filing fees can be several $100s. It also can be a little bit of a discouragement. Both types of bankruptcy, however, get rid of unsecured debts, and they stop foreclosures, repossessions, garnishments, utility shutoff, and debt collection activities. So you really are absolved of all debts. You must receive credit counseling from a government-approved organization within 6 months before filing for any bankruptcy relief. So this is something you have to do before being even eligible to file for bankruptcy, is go through that credit counseling. Finally, I'll leave you with a few resources. There's a Federal Trade Commission. They have a great article on coping with debt. AARP has a bunch of information about debt and debt management. Give us a call if you need, 800-222-4444, option number 2. And then the Justice Department's list of approved credit counselors is listed there as well. And I will happily take questions. There are no questions, that's okay too. I just want to mention that the final part of Money in the Morning on smart investing will be next week at 10 a.m. on Wednesday. So same time, same place. Feel free to come back and join us. If you do think of questions later or just want to chat, you have our phone number. And I hope you all have a wonderful rest of your day. Thanks so much for being here. Oh, sorry, there is a question. Are there credit cards that you recommend? So I will not make any recommendation for a specific credit card because it's really situational. It depends. Do you fly all the time? Do you want, or airplane miles, something that's going to really benefit you? Does cash back work best for you? Personally, cash back works best for me. I'm able to, get up to 5% back on a few different categories. And then that cash back goes directly to paying that credit card bill. So that works really well for me. For other people, it's, discounted gas or free gas every once in a while. So I recommend, take stock of all of your options before choosing one for sure. Look for low interest rates. Is there 0 APR for a year? That's going to be great. Yeah, and see what's best for your situation. How much of the credit limit are they going to give you? Do you shop at a specific department store and maybe they have a credit card and give great deals? That might work for you too. If you have a business and are able to get rewards using your personal credit card, but it's linked to that business credit card, that might be a great option as well. So really discover all of your options. There's tons of information and various different websites where you can, compare different credit cards to see what is going to be the best for you. You can do it on NerdWallet. That's one of my favorites. Mint also has it if you have Mint Mobile. And then sometimes your bank might also have that information just within their banking app. So yeah. Any other questions today? Well, thank you so much for your time. And also, if you'd like to watch again, go to AARP Colorado's YouTube, and the AARP Elder Watch playlist has all recordings from all of these presentations. So thank you so much for being here, and I hope you have a great rest of your day.